right now? Bitcoin only? The 1, 2, 3.
DE versus the RR.
1, 2, 3.
1, 2, 3.
All right.
DE versus RR.
Which one matters more? And it looks like, by the way, we're going to finish the sessions today because we're already the sessions, which means more sessions. So buckle up and get your cup of coffee, right? Sit down and enjoy. It's going to be 1, 2, 3 more hours. So which one matters more?
I believe RR won't matter without the right. Yeah. I believe RR won't matter without the right technical edge.
All right. So we have one saying that this doesn't matter without this. Next.
I agree with that.
1%.
RR would distinguish your risk and reward.
Which this is basically risk management, right? So
Right. RR, yeah, exactly. It would distinguish your risk management.
Do they matter
RR.
equally? Do they matter equally? Do they complete each other? Are they there to help each other? Is one more than the other? So far, we have someone saying that edge matters more.
I believe
It
is
One by one.
Being right doesn't equal profitability. Same.
One by one.
I want to say they matter equally.
All right.
Because you have to know what your A+ setup is in order to feel comfortable risking.
How would you know your risk on an A+ setup though?
Because through tape reading and journaling, you begin to get a feel of what an A+ setup feels like, what it is to pull the trigger and to see a trade develop that fits your narrative, that follows your thesis.
So the risk, what is the risk?
What do you mean?
Well, you need a clearly defined invalidation point, which is their stop loss.
I mean, do you not know your risk when you place a trade? I mean, like,
Even if you have a good
what the R
setup,
is.
even if you have a good setup, you may win 2 or 3 times. But if you have
Are
a
you
good
gonna
RR,
re-enter a trade if your RR fails?
if your RR is good, then the method itself will prevail, I think. If your risk management is good.
I actually think personally, according to what you wrote here, whenever you put up 2 stuffs, I put a verse. It has to be which one do you think is better?
Can you speak clearly, please? Come closer to the mic.
Yeah.
Come closer to the mic.
Yeah. So for me, I think it's RR and percentage.
Okay.
No.
So we have
Yeah.
we're not agreeing. The answer is first of all, if we want to continue, then when you hear someone talking, let him finish, and then you start talking. All right? Otherwise, I'm gonna so one by one. That's number one. Number 2.
Even if you have a solid risk management, the technical edge that matters. Really.
Okay, so if you said technical edge, you're wrong. Technical edge is irrelevant. Doesn't matter. Proof. I can prove this in 2 different ways. Number 1, a coin flip is profitable. If you read about the coin flip strategy, right? There's a whole system, a trading system based on a coin flip, right? So your edge is flipping a coin, not some smart money concepts or some liquidity purge or turtle soup or whatever. Your edge is a coin flip. That's the strategy. That's the system, right? Go read about it. If you have a coin flip as your strategy, and you have a good RR and percentage gain / loss, risk management, then you'll make money over a large enough sample size of trades, right? Conversely, if you have an 80% win rate, right? Now, which of you would like an 80% win rate? All of you, right? Everyone. But if you have an 80% win rate, which is pretty good, right? It's pretty accurate. Can we agree that an 80% win rate is good?
Yeah.
Yes.
So if every 10 trades, win
Yes.
8 trades, 4, 5, 6, 7, 8, 9, 10. You win.
8 of them.
And I know someone like this, right? I'm not going to name him, but I know someone who has an 80% win rate, even more probably. He's one of the best price action readers I know, right?
Hence,
No name is mentioned, but he lacks this part, which is why his win rate means nothing to his balance, his bank account, right? Why? Because if you have this 80% strike rate, which is incredible, right? It is an incredible feat to achieve. But if you don't have this, then you'll win 8 trades. 1, 2, 3, 4, 5, 6, 7. That's not counted properly. 8. On the 9th, you'll blow your account. If you have a 90% win rate, as ICT claims to have, right?
He's up there, yeah.
Which I don't doubt, to be honest. He's one of the best, right? Price action callers in history. He wins 9 out of 10 trades. If he doesn't have this 10th trade, blown account, right? So
Yeah.
this is irrelevant. You can have this at 90% and still be a loser. Or you can have this because of this. So this is dependent on this, not vice versa. Right? So you got to think correctly. Everyone's looking for Enigma and the Holy Grail and candle counting and turtle soup or whatever, right? You're not thinking correctly. Think correctly. Change your mind. Or you can have this as at a shitty, even 30%, right? If you have a good RR. But let's say 50%. Luck. Lucky guesswork. The phrase. And you have a good, solid this, then you win. So does this matter?
No,
Nope.
oh, no.
Nope.
What's
And if
his
someone asks
PE
you,
stand for again?
and if someone asks you why, right? Because any idea I tell you, I can defend for hours, right? If I can't defend my idea I'm giving you over here for hours, I don't say it, right? So this one, if someone asks you, why does this not matter? Well, because of this and this, because of a coin flip strategy, and because of these writings over here, which is you could win 8 on the 9 you blow, you could win 9 on the 7 you blow. So it's all everything is explainable. And in summary, technical edge is irrelevant. Turtle soup is irrelevant. Candle counting is irrelevant. DR is irrelevant. Hoppy's book is irrelevant, right? The open, hello, and close are irrelevant. All the horse shit you see on Twitter is irrelevant. All that matters is this. Without this, all your knowledge, and I'm sure there's a bunch of you, right, who are relating this to this pretty hard, right? You may have a lot of knowledge, but you have shit management, which is why you get wrecked, even though you're some advanced student of price, right?
Yeah.
So that is regarding technical edge versus risk to reward / percentage gain. Now that does sound kind of strange, like because this whole course is about price action and reading price action. And I don't like to use the word course, to be honest. It was not the intention to be a course, quote unquote. That's not my intention. It was just a gathering, a sit down, just a chat more, if you will, right?
Yes, sir.
In summary, you don't control price, even if you have Enigma, right? You don't control price. You control your risk. You don't control price. You control your...
Excuse me, Z1, could you turn off your mic if you're not speaking?
sorry.
It's gonna like go into recording. That's why. No. Yep.
Right. So adjust your risk to price. No, adjust price to your risk, not vice versa. Excuse me. Right. That's point number 3. Right, let's remove all this. If you want to take notes, then you have this in front of you. Or no, I'll give you 5 seconds and then I'll delete it. Delete 400 drawings. Remove. So point number 3, what are the markets? Point number 2, 8, trade losing streak. Point number 3, technical edge versus risk and reward. Right? Markets, 8, trade losing streak, and edge versus reward. Number 4 is the journal, a super important aspect when it comes to learning a model, especially learning price in general, right? Because every single job in the world has a register, right? Every single job you see, as a lawyer, he doesn't memorize his client's documents, his case details. Well, except if he's a psychopath, then maybe. But generally speaking, and we speak in generalities, not in exceptions, because exceptions do not disprove the rule, right? So every profession in life has a register. A doctor as well, right? Doctor. When a patient comes to me, for example, I have to take the name, the age, his medical history, his reason for consultation, signs, symptoms, allergies, family medical history, etc. Right? For every single patient, I can't suddenly skip a patient one day because I'm feeling tired. Right? I can't say, you know what, fuck it, today I'm not gonna write his allergies because that can kill him. That can lead to his death. Right? That's an example. So I don't do it because I want to. I do it because I have to do it. All right. Even the most basic job, cashier, for example, basic meaning not to belittle them, but just a very simplistic job, cashier. Even he has to print you a receipt at the end and give it to you. So everything is registered, right? So why should trading be any different? So the purpose of the journal is 2 things. Journal meaning journaling every single mistake as you would a patient, right? As I would a patient, not you. A bunch of you. I've seen a neurosurgeon in there. I see you. So as we would a patient, we journal every single trade to see the following. And before we look at the following, the purpose is 2 things, is to eliminate mistakes. Eliminate mistakes. Horrible handwriting. Good luck reading it.
Typical doctor.
Yeah, what can I do? Comes with the territory. And correcting mistakes and eliminating shit trades. Eliminating. That is shameful. I can't do that. Eliminating bad trades. Right? Now, before you say, fuck you, Romeo, what is this? What is this? We came for turtle soup, for price, and you're giving us this is the foundation. Because to read price the way I read price is why you paid me and why you came here anyway. Right? You got to think like me. So, bad trades. Now, how does this work? Correcting mistakes is self-explanatory, right? Mistakes. You identify a mistake, you're repeating again and again, and you never do it again. It's that simple. And mistakes will happen. There's no one perfect. Even ICT himself journals on paper, right? At least he used to before he retired off of the course, right? Eliminating mistakes. So journaling is essential, right? You identify the mistake you made and you correct it, because every every sickness has a cure and every problem has a solution, right? So whichever mistake you make, whatever the mistake is, I held too long. What's the mistake? You didn't identify a reversal point, right? It went above a high and you expected it to go higher and it reversed. Turtle soup. I didn't hold too long. That's the mistake. The correction is keep in mind the higher time frame bias, because when you don't hold long, or when you catch a move and you see it rally like 20 or extra, why did that happen? Because you didn't keep. There's a very specific reason. It's not random. Every problem has a solution. So when you when you don't hold trades for long enough, it's simply because you did not keep the higher time frame bias and flow in mind, right? I didn't take partials, right? Because you didn't consider it as an area of reversal or reaction, right? Because we take partials at two places. Right? Someone's mic is on, so
yeah, I just want to. It is vice versa when you do keep the high. When you're doing low time frame, yeah, you're seeking high time frame evaluation.
That is correct. Which is when you hold a trade, when you can't hold a trade for long, it's two reasons: the higher time frame, and you're not confident in your analysis abilities, right? Which means more tape reading. Because the more you tape read, the more confident you get. The more you believe in the system. So, not through backtesting. Side note, backtesting is cool, as we know, and I'll be showing some examples of history. History meaning not history of people, history of the charts, history of price action. Because as we know, history is a gold mine, and it repeats itself for those who have eyes to see. So, backtesting is cool, but tape reading is the skill you want to master and really focus on. So those are some examples of some mistakes which I didn't write. I'm more of a speaking guy, which means that I'm getting some messages saying someone can't hear the voice. Is my voice clear?
Super clear.
All right,
Bro, you
Voice is clear.
All right, in that case, so my friend who is sending me a DM, you will get the recording later on. Don't worry. Right. I'm assuming someone's recording, huh? I'm relying on you guys.
I'm still recording.
All right. There's someone who promised me to record 2 people, so it should be fine.
I'm 5 minutes in.
Any questions you have which are not related to the current topic at hand, you can leave them for later because they'll be answered, right? So those are some examples of some trade mistakes and their corrections, right? I said them, I didn't write them, so I hope you noted them down. There's some common mistakes.
And these common mistakes are just errors, right?
Or just what?
Human error.
No, they're not. I mean, they are human error because, as we know, the chart is perfect, right? The chart is always in sync. Time and price are always in sync, right? Liquidity pools are always getting hit at certain times, at the exact times they're supposed to be hit, right? Turtle soups, which is the expansion, the swing points, the highs and lows, the major swing points, they always occur at the times designated for them. The only error is going to be from the operator, right? If I make a mistake, if you make a mistake, if ICT makes a mistake, if any of these charter members over here, which I see, make a mistake, whoever makes a mistake, right? It's not because of price. You see people blaming price. Oh, what is this shitty price action? No, it's you, right? You're the operator of the system. The system, if you review the manual, the system would tell you not to operate in such conditions, right? So it's human error and it's correctable. That's the point. You make a mistake, you can correct it. There is a correction for every single mistake you have.
So would you say that there's nothing like low probability conditions?
No. There's market profiles, and you have to identify the market profiles, which I've said for a long time, forever. It's the way you analyze the market, right? You profile the market and see, is it valid to be approached or not? Which is the next lesson, right?
Thank you.
Market
Romeo,
profiles.
when you... Yeah, okay.
So the market is always in one of three profiles, right? As an intro, the market price, when you open a chart, you want to profile the market like, I don't know if there are cops over here, law enforcement, but when you see a criminal or a suspect, right, and you profile them, you make sure, are they approachable? Are they a threat to the surroundings, to me, right? Can I approach them without a weapon? Do I need a weapon? Do I need backup, right? You profile the situation, the person, and then you approach based on your analysis of the profile, right? So same with the market. You go, you open the chart, that's the first thing I do, is profile the market. That's a common mistake, which people say, hey, Turtle Soup is a scam. I tried some random high and it just blew through. Why? Because market profiles. You open the chart. Are we trending? Or are we ranging? Right? Because it's only two market profiles. We're either in a trend or a range. Always consolidation, expansion. Consolidation, expansion. Consolidation, expansion. There's a way to trade each of them. Right? It's a rising channel. I don't know how I drew it, but it's there. And of course, a 2.1, you can call it, is a choppy market, meaning not a ranging, a choppy, which is visibly illiquid price, right? So there's no liquidity. It's just it's not even ranging. A ranging is a clear defined range, as you've seen me draw many times on Twitter, right? I draw when there's a swing low and a swing high, and it stays in between the swing low and swing high. This is a clear defined range of price, right? That's different than a choppy market. The chop is this over here inside here, right? But then again, one could argue that the chop on a higher time frame, as we saw, is a expansion on the lower time frame, because time and price are fractal. So due to the fractal nature of price, if you dig deep inside of a consolidation, you'll find a classic sell or buy candle, right, on the lower time frame. So consolidation, expansion. So
Yeah,
this
Robert,
could have.
can you give an example on BTC?
Sure. So, for example, which I gave just a few hours ago, right? But here you go. So you have this. Let's choose a very choppy, visibly choppy piece of price. Like this one, for example, right? We saw just now, remember? This one. What is this? When you see small candles like this on the higher time frame, small, visibly, so we're looking at the size of the candles, right? Size will tell you whether it's a consolidation or an expansion. So when you look at the size of the candle, a small candle like this will indicate to you a range on the lower time frame. We saw this a couple of hours ago, right? Zoom out. So this smaller time frame, this larger time frame chop, which looks untradable, right? If you look at it as only an hourly chart, as a daily chart, excuse me. If you look at it on the daily, then it's chop. It's nothing. It's quote unquote low probability conditions, right? But if you look on the hourly, for example, let's hope we can catch it on the hourly, then you can find that it is a clear defined range, correct? So we went from a higher time frame chop to a lower time frame range. Remember the 3 market profiles? 1 is range, 1 is trend, 2 is range, and 2.1, which is part of range, is chop. So we went from a higher time frame choppy market to a lower time frame ranging market over here. And if you go to an even lower time frame, so a clear defined range with a high and low, right? Turtle soup, range low, range high, classic. So within this range, you have this candle, for example. This candle is a classic buy, yes or no? This one right here.
Yes.
So if you go to the 1 minute time frame, this was a trending day. It was like a classic buy. You can trade this by itself, right? Classic buy over here. Right. So this speaks to the fractal nature of price.
That would be like a market structure shift within that.
There would be a you'd also probably see a turtle soup or a failure swing inside there, right? Over there. The same, you'd probably see this. The same exact pattern, which repeats, pattern, quote unquote, which is
before the market structure shift, like you reckon, we had the low and the high, and you see price going down. How would you determine that, though?
Determine what?
We had your arrow right there. Before that, you can see the low and the high.
Right.
You would just wait. You would just wait into the market structure, or that low and the high.
Right.
You would just wait into entering, right? Then that would be considered a turtle soup right? Or
you'd wait for this, you mean?
Yeah. No, that would be considered a market structure shift.
I'm not talking about entries right now. I'm talking about the fractal nature of price, my friend, right? How to enter is number 4, right? We'll get to it. And this one specifically, right? But now I'm telling you that the chop on the daily time frame, which is untradable, right? Untradable chop, pretty much like this, right? So profile number 2.1, right? On the lower time frame, it is a range, right? So profile number 2. On an even lower time frame, it's a trend right here within this candle. How do I know? Because that's how candles work with the open, high, low, and close, right? This candle, you can see right now, it opened like this. It went below the opening price. It rallied. Right? Probably an OTE in between, as they do. It went and it gave a high, then it closed, right? The classic 3 trades per candle, which I've said on YouTube. It's what it is what ICT teaches, right? So buy in a bullish environment, buy below the opening price. Find your pattern here, right? Don't just look for a pattern randomly. Find the pattern in the wick. So below the opening price, buy, rally, classic buy candle. So this right here, this is a trending candle in a range in a chop. Right? One day. So in summary, all those details aside, is we have the market types, market profiles, if you will, which is a trending market. So you open any chart, are we trending, are we ranging, or are we chopping, right? 1, 2, 3.
Romeo, the 2.1 is what you call a seek and destroy?
A seek and destroy is this, according to ICE. It's just going and taking liquidity. What's the definition of seek and destroy? Tell me.
It takes out the buy stops and the sell stops and the buy stops and the sell stops. Allowing
What
one
does it sound
to
like?
profit. It sounds like 2.1. It's okay.
Also this, right?
Yeah.
But a real seek and destroy in my books, right? It's not what ICT says. The ICT goes and refers to any, not only him, like even the people on Twitter. They refer to any range as a seek and destroy. Nope. There is a way to trade ranges, right? My bread and butter trades come from ranges. So you have a range, you have a trend, and you have a visible chop. What's a chop? A chop is, and even the chop, as I showed you, is tradable. If you lower the time frame enough, if you go small enough, and eventually it'll fit, right?
And the other question was regarding the eliminate mistakes part. Yeah, value journal, right? So you do.
I'm getting to it right now. Right now. This is just a side introduction to market profiles. So eliminate mistakes. You mean this one or this one? Which one? are you
So
referring to?
the left one, when you said eliminate mistakes, is that it's always
What's your name?
Rob.
Robin, right?
Yeah.
Right. So you were saying?
So I was saying, you said that there is no bad market but a bad operator, right? But you do agree that every setup fails once or twice. So how do you actually identify if the setup has failed or you were wrong?
What you're doing right now? Do you mean like live or afterwards?
Like, let's say I took a buy, okay, at a higher time frame PDRA according to my model, okay, and then it failed. But
So the
then,
higher time frame PDRA failed.
Ti-am sunat azi dimineață.
so how do I classify if it was my mistake or if the price actually just failed?
Is that your question? Your question is, I entered at a higher time frame PDRA, and the higher time frame PDRA failed.
Yeah, the setup failed.
Then your analysis was wrong. You were wrong in your analysis. It's that simple. Why? Because when do higher time frame PDRA stop working? When you reach a higher time frame liquidity pool, right? Then you can expect a displacement, and from there on, as soon as they start disrespecting bearish or bullish PDRAs and respecting bearish ones, order flow, basic order flow, nothing new. Right? So if it fails, then follow the order flow. It's that simple. That simple.
So you're saying like if it fails lower time frame, seek higher time frame.
If a if a 5-minute support level fails, go to the 15-minute. 15-minute support, a key level, a PDRA. If it fails, go to the 1 hour. If a 1 hour key level fails, keep going up, right? And I'll show an example of this in the upcoming 2 hours, right?
Okay.
So, regarding eliminating bad habits. Bad habits. Bad trades, excuse me. Now, when you go through a process, and we're taking too long in this lesson, so I'm gonna have to shorten this a bit. When you go through the process of writing down for every single trade the following, right? So me, for example, every single trade I take has this written down for it. A bit less now, of course, but every single trade is, for example, trade number 69, right? The number of the trade, the asset class, and two things, before and after. Right? Before and after. What's that? Before, I expect ES to bounce at weekly FVG and attack February highs. Right? Expectation. So before is the expectation. That is a horrible, disgusting handwriting. Whatever. Who cares? expectation, and after is after it happened, of course. When did it happen? Where did it happen? How did my expectation play out? And how could I have done better? How could I have executed better? I entered too early, for example. I was trying to catch a bottom. Right? Too early. I got wrecked. Why? Because you wait for the first high that broke a low to be taken. For example, you don't wait for it to completely trade into theory. For example, right? So when, where, how did it play out, and how could I have improved on my execution? So when you do this for every single trade, because you have to, right? Imagine doing this for every single trade you take, not because you want to, because you have to. And would you really even consider that order block FVG lookalike, which you're trying to trade because you just you want to press the button and feel the thrill of a win again, even though you're on a losing streak, right? Would you? You wouldn't. So this makes you a lot more selective with your trades. It makes you take less trades, selective, right? It makes you a lot more selective and picky with your trades. That's how you want to be. Right? You can overspend trades in an expansion leg. For example, in a classic buy, you anticipate at least 2 entries, one over here for the turtle soup and one OTE, right? At least those 2, turtle soup, OTE, they're guaranteed almost, right? So on this price leg, you can overspend your trades, but generally speaking, you have to be super selective. And the process that helps you with this is doing this. Helps you with eliminating the trades is journaling, right? So when you do it diligently because you have to, then by default you take less shitty trades. So that pretty much caps the foundation. Finally, took a bit longer than expected, but that's why we have disclaimers in life.
We still have 3 classes left, right?
Of course. Obviously, you're not going to go until you get all those 4, right? We may not, of course, as I mentioned, it's not A to Z completely. A to Y maybe X, right? Y and Z belong to me.
We'll get to Z.
We'll see. We'll see about that. Fine. For myself. So. That is the foundation capped. This is how you think, right? So in summary, just a refresher, because when learning, the best thing you can do is take a quick review after you learn, directly after you learn. Whether it's university, whether it's class, whether it's high school, it's whatever. The best way to learn is 1 review before the class, focus during the class, 1 review after the class directly, and 1 review when you get home. That way you've already seen it 4 times and you are golden. So, to review, what are the markets? You know, they're not a exchange place. Nope. 8, trade losing streak. Technical edge versus risk and reward. And finally, journaling. This is the foundation, the base way to look at price. All right. Now, any questions? Before we go into number 2, which is the mechanics, the basic mechanics of turtle soup and smart versus dumb money. So before we proceed, do you have any questions? Foundation? The mic is yours, my friends.
I I'd love to know, Romeo, how you personally journal, whether that is by paper or on your iPhone, iPad, etc.
I first of all, I would rather that you guys don't ask personal questions, more charts, but I'll answer you, right? I personally journal on paper.
Cool. Thank you very much.
Pen and pad, old school, right?
So do you review every week?
Every single day at the end of the trading day, before I sleep, right? Whether it's on the phone or whatever, I always have to take a look at the charts every day, every single day.
Hey, Romeo.
What's up, buddy?
Well, besides the charts and everything that you look at, what do you see in the world economic? You live in SCT, and how do you see your country trying to survive the war that's bleeding throughout the world?
Which war?
The Ukraine. The fake one.
Exactly. That answers your question. That is the answer to your question, my friend.
Do you see it bleeding to your country or the rest of the world, or how do you see it besides the topic right now?
You just called it a fake war, right? So that in itself is the answer to the question, right? So how can a fake war bleed to other countries?
I don't know. Maybe other countries just bleed into it.
It hasn't bled so far, has it? And it's been what? How long is it? A year? I think it started last February, right? If I remember, it was.
You're not wrong. Yeah, you're not wrong.
I remember why, because it was at the time that BTC bottomed temporarily at the range low. So at the range low, they declared the war, and then it rallied 50% almost. Right. That's the only reason I know the war exists, is because it was a bad news at a bottom, right? That's the only reason I know the date it started. I think it was 22nd February or something. It was the swing low on BTC. Let's go and check.
Wait.
There you go. I think it was right here. Yep. Zoom in.
Would you manage to trade if the United States would buy and send money to them or no? How would you consider a BTC trade?
24th February, right here. This is the war. Look what happened after the war.
Yeah. That is the war.
So we were saying,
how would you consider when the United States considered managing the money to Ukraine? Would you consider that like a buy or sell?
A buy or sell for what?
For the United States to consider the war, like sending money to Ukraine. You just pull up the diagram right there.
Right. So do you mean would I buy or sell the equities, the dollar, what? Which asset class?
The dollar.
I don't trade news, my friend. I trade the chart. Right. I literally don't know what the news is. The only reason I know the news, as you saw, is because of a range low. Right. A ranging market. We hit the low. Magically, there was news down there, but I was bullish anyway, right? Because of the range low. So I don't look at the news to predict the charts. I use the chart to predict the news, right?
Horrible handwriting. Good luck reading it. Typical doctor.
There you go. Some leaking on. Huh? Enjoy.
Are you playing recordings?
Nah, it's all good. So any more questions before we proceed?
Yeah, one more from you. Let's say you took a turtle soup entry, A+ setup according to you, okay? But then it failed. Okay. So are you gonna tell yourself that you were wrong?
My A+ setups never fail. Right, but if it was to
for you with this, yeah, go on. Sorry.
If it was to fail, right, then I'm wrong. I can never, and I will never blame price. Right, it's always my fault if I'm wrong, and I am wrong sometimes. Right, but when I'm wrong, It's my fault. It's completely my fault. I misread the order flow. I misread the reversal time, the reversal point, the liquidity pool, something, the order flow. I misread something. So any mistake I made is mine, not the chart. I will never go and say shitty price action, right? I will say choppy price action, ranging price action, trending price action, right? Fast, slow price action, but I'll never say shitty price action. You know, it's all my fault.
So you'll never say it's a shitty setup too.
Hey, wait. I can't hear anybody that's talking, man. Let Romeo talk, yeah?
Journaling is essential.
Can you got that guy who has the recording in the background? Can you mute your mic? And regarding your question, Robin, what's the point you're trying to get to?
The point is, everyone agrees that a setup fails, right? How is it that possible that you can always tell that you were wrong, even though your setup would have been A+, but it still failed?
Misassessed the setup. You're not a robot. You're not an algorithm, right? If your setup failed, there was I can guarantee you that if your setup failed, then you made a mistake somewhere. And go back, look back at your A+ setups.
I hear your feedback. I hear your feedback.
Again and again. You don't mind, mute your mic, right?
When you catch a move,
this guy who's recording, mute your mic. If you don't mind, thank you.
It's Z1 Trader, unfortunately.
Z1 Trader, please, if you don't mind. Mute your mic.
Dude, my shit's done, dude. Like,
long enough.
1 second. If there's no order, my friends, then this fun will be over and I'll have to speak by myself, right? So please maintain order. So we were saying, Robin.
Yes, Ramian. I understood.
Right? So there is never, ever a time where price is wrong. Price is always right. It's whether you're in sync with it or you're not. That's all it's about. There's no other explanation. There's no other way around it.
Okay, thanks.
Gorgeous, beautiful. Look at that. So now we move on to number 2, which is the market efficiency paradigm. Oh, repackaged ICT bullshit. Fuck you. No, I'm focusing mainly on highs and lows right now, right? Of course, we all know the market efficiency paradigm as shown by ICT. You know, the diagram, smart money, dumb money. I won't be reteaching what he taught, but I'll be looking at it from a different perspective. Right? Because the concept of smart money and dumb money has always existed. It's the way the markets work, right? It's run by certain people. The markets are owned by a small group of people to sucker in a large group of people. So who is smart money? Answers. Who is smart money?
$1 million players.
$1 million player. Right. What else?
The guys who understand
You want to stand out, he said?
No, I said the guys who understand the algorithm, which the large funds don't.
Wrong. Smart money is a small group of people, right? Whether it's a small group of families or friends or whatever, right? We can speculate regarding who they are, but smart money are the market makers, right? Smart money are the market makers. And of course, then you have the sheep to be slaughtered, the suckers. Who are the suckers? Who are they? Another question.
Everybody else.
Retail.
Large funds, retail.
The
sucker-
uninformed. Sorry, mate.
Uninformed what?
The uninformed.
Us.
Who are they? Who is it? Me and you?
Yeah.
No, I would say yeah.
It's not the way ICT Twitter makes it out to be, right? They make you think like if you watch an ICT YouTube video, you become smart money. Wrong. It's a small group of market makers who have always owned the market previously manually and now with an algorithm, right? So previously it was a manual operation of transfer of accumulation, distribution, transferring money, taking it from highs and lows to below highs and lows, right? And vice versa. Which used to be done manually and now is done algorithmically, with electronically, as we have moved into the new era of technology, right? That's how it works. The dumb money is the hedge funds, the institutions, and if you learned one thing from 2022, it's that hedge funds don't know what they're doing, right? You had FTX opening longs at 65K, some bullshit going on over there, right? Hedge fund, right? A lot of institutions going bankrupt all during the year, especially in crypto. If you're into crypto, then you'll remember every single hedge fund and institution, quote unquote, was getting wrecked. Who was wrecking them? Themselves? Nope. Smart money. Markets. Now, smart money has taught dumb money how to trade and use that to take their money. How? These classical technical analysis books, right? What do they teach you? They teach you to buy above a high, right? A double bottom breakout, and sell below a low, right? When you see a double top breakdown, right? So the classical technical analysis, every single school of classic technical analysis teaches you to buy above a high and sell below a low, right? And that is not the case. And in this teaching, this is the most important core part of all these 4 hours. So pay attention, right? This is the core, the essence. So all of you sitting in here, the guys who paid legally, illegally, all the goofball haters as well, everyone pay attention, right? Take some notes. So they have been taught to buy above
Hold on,
highs
let me record it real quick.
and sell below lows. You can do that without saying it, my friend, right? Buy above highs, sell below lows, which usually will lead to one of two things: a retracement to continue, or a complete reversal, right? When you buy above a high, then you are at risk of one of two outcomes: a retracement for continuation or a complete reversal. You follow? What they're taught in classical technical analysis, whether it's classical support resistance, Wyckoff, Gann, Elliott waves, right? Whatever it is, they're taught. Elliott waves less. It's one of the more accurate ones. But what they're taught in general is to buy above highs and sell below lows, buy breakouts and sell breakdowns, right? If any of you have been trading retail before, then you've seen that, right?
Nu îl pierd. O să mai ieși n-al meu dacă îți place.
Hey Ramya, can you go back to what you
Dacă
just
nu
saying over there?
asta, du-te cu Darii și vin și eu în jumătate de oră când suntem.
Smart money has taught dumb money to buy above highs, and for those watching later, there's a lot of things you're gonna have to skim through. But good luck. If you really want it, you will skim through them, right? So, buying above highs, and they expect price to do this. Now, how many times has price done this, in your opinion, in your eyes, in your experience? Not that much, right? What usually happens, and it's not just a pattern, what usually happens is something like this at a bottom or a top, right? Right? So it looks similar. They have tracked it to a close extent, but it's a completely different thing. And a side note, even the market structure shift SMC, quote unquote, traders, what they do is this. They come and they expect the shift to be like this, right? They expect this to happen. So how are they any different from these guys? Right? They aren't. They're all retail sheep. A real market structure shift, and I shit on market structure shifts all the time, but a real one, a true shift in structure where they are no longer interested in the same direction and they have changed order flow, right? They have flipped from bullish to bearish or vice versa. A real breakout will never give you an entry at the breakout position, or a very small, a very momentary entry, right? A real one will really expand. Everyone's going to chase, decline sharply. Everyone's going to be afraid over here, and then rally, right? So this is the logic behind the move. Bottom, right? And of course, always, every single time, there is the higher time frame PDRA involved. Always.
Can you give an example with BTC or something? Because
not now, not in a while. You'll get so many live examples, you'll get bored, right? Wait. So you have a low, the bottom's in over here. Look at the logic. Focus on the logic, right? Not the pattern. You have the low, bottom's in, right? You have a high, market structure shift. You get wrecked. Everyone's selling over here, right? They get wrecked. Everyone's buying up here, right? And the guys were short with their stops over here. Also get stopped down. It sinks deep inside. Everyone's bearish again over here, right? And it rallies. This happened in BTC just, and of course, this is another one of my live calls on Twitter, right? That is a habit which I've taken from ICT, which is fine, right? It gives trust to know that someone can call the moves beforehand, and it is necessary. The least you can do is, as I mentioned in the 3-hour rant before this, the least you can do is call price and explain it in a consistent logic. That to me matters more when I'm assessing somebody, if he's a good price action reader or not, because that's all that matters to me. I don't get your payouts, and I don't get a split from your payout, right? I don't get a cut from your profits, your P&L. That's yours. I don't give a shit about it, right? Can you read price? And can you explain it to me in a consistent logic? That's all that matters to me. Which is why ICT himself, right, got so many students off of demo trading, Demo Waller, right? Why were they so attracted to him? Because he calls price, right? And I'll always pay respect to him. He's the mentor of the mentors. He calls price and he explains it in a sound logic. If he never even showed a single execution, I can see what he's seeing on my charts, which is why I trust him. So the same logic over here, right? There's a key level at 16,200. I'll leave that for you to figure out, right? Figure that one out. So when we were up here, my target was 16,200, precisely 16,200. Go back in your charts and good luck with it. So what happened here was exactly what I drew there. You asking for the example right here. And this one is not a hindsight example. And even if it is a hindsight example, I'm pretty sure that you won't find many people explaining it, even in hindsight, as good as this, right? So the key level is 16,200. False bottom, right? False bottom. It gave you a false double bottom, correct? It rallied into a breakout. Now, every single one of you, I'm pretty sure most of you, at this point, right? What would you do? Give me some answers. Replay. Let me just make sure I've covered the important parts. Yes, I did. Right. Check it out. Where's a replay? On the laptop. I'm used to the phone because that's where all the trading and analysis happens. Where's the replay button? Damn. Is this different?
You got to move the toolbar that you up on your screen.
Where?
The risk reward. Yeah.
Right. My bad. So, what were you doing up here? What do you see? Let's go and pull out the good old replay button, right? The good old hindsight replay button. What would you be doing?
I would see a lot of consolidation. I want to see the high being taken on what is that? The 12th of September, or what is that?
What about that?
I want to see that being taken out of. But
why are you ignoring this? Why are you ignoring this shift in market structure?
I didn't know that.
You know now, and FVG as well.
But what would personally, what would you consider that?
I'll tell you exactly what I consider it, and I considered it right.
But wait,
for now,
where's the asshole that messaged me?
What are you saying?
Wait, sorry. My bad. I meant to mute that.
Focus. So we were saying, what do you see over here? Answers.
2022 mentorship entry model, market structure shift, and fair value gap.
Beautiful.
And an IO FED.
All right. FED? What's that?
IO FED. Institutional or entry.
Institutional. Okay. Fancy terms, right? And what else? What else do you see?
Equal loss.
Very good.
That's fair value gap right there. That's a fair value gap on what is it? Hourly? Fair value gap on hourly and breaker. Old breaker.
Nice.
But the move is into a bearish fair value gap, right, on the left side.
Okay, but it shifted structure. So do you choose this one or this one? Which one do you choose?
It looks like it's the fair value gap is the high time frame.
Which one do you one by one? Which one do you choose and why?
I think the one.
If I'm being honest, I would choose the most recent price action, which is the market structure shift and the BISI, the bullish fair value gap below, which is not going to be the correct answer.
Well, we're dealing with the daily time frame right now. That you see that big ass candle, the red one. I'd rather choose that as a.
Okay, so you would rather personally with no system. So this, I would rather choose it because it looks nice. That's what you're saying. Give me a
personal liquidity.
I actually choose the
one by one. If you hear someone speaking, please remain quiet.
Actually, I'll choose the inversion there because it actually has an inversion on the BPR inside. So, and I'll use the size of the candles, and I'll actually go for bearish.
Okay. You see, in hindsight, it's easy, right? Because you know the answers. But to really learn, be honest with yourselves, right? We can all
I'm trying to tell you, like in hindsight, yeah.
See, this is a prime example of back testing, right? Back testing. When I back test, at least I don't know about you guys, but when I back test, and I don't see myself superior to any of you, by the way. Just it's a simple sit down and talk with all of you, right?
It's not, yeah.
Showing you
100.
something which you may not know, right? About turtle soup, especially, right? So when I see this, I'm trying to live the moment. What would I think at the time? Bullish or bearish, and why? Right?
I see a breaker too.
I would say it's bullish because
here's a breaker. Here's a breaker. Look at this.
Yeah, I see a breaker.
Bullish, buy side liquidity, right? Fancy term thrown around loosely.
Before that, dude.
Exactly, buy side liquidity to the moon, right? And you, Zlatan, why did you say bearish? Why did you say bearish?
I say bullish.
I said bearish because
no. Zlatan FX. He said bearish. Why? With a solid reason, not some random.
You're talking. The fair value gap there was bearish, and it was invalidated. Then price later used it more like a resistance, more like a support onto resistance. So it's an inversion. I'm gonna use that.
So you're gonna ignore the breaker, and why? It's a breaker by definition. It's a breaker. Why are you ignoring the breaker?
Actually, when I see equal lows, I try my best to see a reason why they set out those equal lows. I don't like taking setups that are below or above liquidity.
Good.
Why do you consider that as a breaker, per se?
Why do you not? I mean, if you look at the pattern for the pattern's sake, low, high, lower, low, higher, high breaker.
Yep.
Well, it's a broken breaker, right? It's not like
what do you mean broken breaker?
We broke that breaker because it's not for the low, but for the high.
Low, high, lower, low, higher, high. As solely a pattern, it's a breaker. Yes or no? Do you disagree?
Yes.
For high time frame.
What's the breaker? What's the pattern? What's the pattern breaker? What does it say? Low, high, lower, low, higher, high, and that's a breaker, right? As soon as you close the body above the breaker, then you can use the breaker's body as the pivot point to enter from, right? Depending on the shape, of course. If the breaker has a wick, you choose the wick. But if it's a long wick, you choose the wick to the body. You prefer it to be a large candle, right?
That was a negative breaker until it was broken, right?
What do you mean?
That was a negative breaker until it was turned to positive.
Breaker. This one.
Yeah, that one. The above it. Where the box is.
There's no negative breaker, my friend. This is not a breaker. This is a bullish breaker, as a pattern, with no logic, with no.
It turned logical for the positive because it was broken. No.
Which means are you bullish or bearish? Are you bullish or bearish?
Right now, what the signature says, I'm bullish now.
Exactly. That's the point. So how is it a breaker? Because of this, right? 1, 2, 3, 4. Breaker. Zlatan brought up a good point, is when you see equal lows or equal highs, right? The only time I will accept a bottom or a top to form with equal lows and equal highs is if there's an SMT, right? That's the only time. Generally speaking, equal lows and equal highs are usually price doesn't go too far away from them, right, before reversing. Not solely as equal lows, equal highs, as a pattern. Again, that's another pattern, equal lows, equal highs, right? There's a lot more reasons, and the correct answer is show me the higher time frame, right?
Yeah.
So you can't just say breaker. You have to show me the higher time frame. Now, another example. Let's go more into the logic. Of course, we know what happened over here, which is we went above a high. Those of you who were into crypto back then, you remember that everyone was super bullish up here, right? Everybody and their mama was super bullish up here, above this high. Remember, rule number one of smart money, quote unquote. Rule number one is buy low, sell high. Right? Buy low, sell high. Or don't buy high and don't sell low. That is the rule number one of turtle soups, right? This is the whole logic behind them, is buy low, sell high, don't buy high, and don't sell low, right? Applying this. Now, that can be ambiguous, right? That can be, everyone knows that. All the retail, quote unquote, traders know that. So, how do you measure high and low? Some of you already know this, right? Some of you who are in here already know what I'm going to say. How do you measure high and low? You measure it using, let's use a recent example, spikes things up, right? Let's use ES.
I live high and low.
What are you saying?
What? No, I'm listening.
All right. ES, highs and lows, right? So how do you measure high and low? And if you remember, on the good old Twitter, right over here. Good old replay, but this one is called live, so I've earned the right to dissect it in hindsight. So right here, what do you see? What do you see over here?
Market structure shift.
Market structure shift down.
Very nice. Beautiful. Excellent. So bearish, right?
Yep.
Correct.
All right. What happens next? Before that, I want to focus on this part where this day closed like this. Now what do you see? Shift, right? Market structure shift to bearish with an FVG. Everyone and their father and mother and sister and brother and cousins and everyone and their dog, if they had a dog or cat, whatever, or tiger, everyone was trying to sell this FVG. Probably some of you as well. Yes or no? Be honest. Don't lie to me. Was this on your radar for a sell?
Yes, I would.
I mean, you guys, I'm assuming you trade ES, right?
Yeah.
Exactly. So what were you thinking? This is a recent active trade. It's not some 1 year. So what were you thinking over here?
On the Thursday, before that large bullish candle printed, the daily time frame did make me flip my bias to bearish.
So you flip bearish down here, right?
Correct. Yep.
All right. And then what happened? Did you execute? That's normal, but did you execute based on your bias?
I did not execute. No.
Why?
Because of the weekly time frame, if I'm being honest.
All right. Very good. That is an excellent answer. Now, others answers. What do you see over here? What is this? What do you see? WDYS.
That is a market structure. I want to expect that fair value get to be filled. I would say.
Let's use you as an example. What's your name? 1 second.
Z1 Trader.
Z1 Trader. Let's use you as the example for this example, right?
Please.
Let me show you. Yeah. Let me show you the power of the higher time frame and what it can do to you. So, what happened over here is you're saying it's a bearish market structure shift, right?
Well, I wanted to go back into that.
What is rule number one?
Gray zone.
What is rule number one? Before anything, what is rule number one?
Approach to market. No.
Rule number one.
Approach to market with no consideration.
The fuck is that?
Don't buy or sell highs. Lows.
Nah, no. The hell is that? No, of course not. No. It's buy low. Right? So rule number one.
Sell high.
Buy low. Sell high. Or don't buy high.
Sell low.
Don't buy high. And don't sell low.
Buy high, sell low.
That's before anything. It's basic economics, right? Now, where do you find the best, the most expensive places to sell? You want to sell high, right? You want to sell for expensive, not for cheap. The best place you can sell is above a high.
Yes, sure.
The best place you can buy is below a low. Now, these are basic concepts not to be used by themselves. Otherwise, you're going to get wrecked. That's why we have market profiles. That's why we have PD arrays. That's why we have opening time, right? That's why we have profiles. No market profiles, templates, rather, right? But the basic premise is when you learn a new concept, then you learn the basic bare bones concept, and then you build on it later on, right? So rule number one is buy low, sell high, don't buy high, don't buy. Now, how do you measure high and low?
I would assume with the premium discount Fibonacci, you know what I mean? We're just using the fib for that reason.
I measure high and low using, I measure high and low using 3 different. Why the fuck is this doing this? What is this? All right, never mind. So, number one, using the IPDA data ranges. I think this is a magnet or something. One second. Let me go check. All right. So number one is the IPDA data ranges. They help you measure high and low, right? How does that work? Anyone knows? Nope. All right. IPDA data ranges. Number two is the dealing range. I'll answer. I don't answer right now. Next, the dealing range, which you measure the Fibonacci from. And finally, you have the. Let's write this down with the. Let's write this down with the. Clear. So how do you measure high and low?
Hey, Romeo, somebody's
as shown by ICT.
Somebody is Z1 Trader. Z1 Trader. If you do that again, I'm gonna have to.
Z1, can you mute? Somebody's like mocking you right now.
What he taught.
I'm gonna have to mute you.
Apparently, I have that shit on.
Because the
There you go. That's better. So there's someone I want to add to speak because he's an astute learner. Let me see if I can find him. If I can't find him later on. Please be found. Nah, I can't find him right now. I'll find him later on. So how do you measure high and low? By using the IPDA data ranges. That's number one, right? Number two, by seeing the dealing range of the low which you measure the fib from, right? And finally, the current expansion leg, right? These are the 3 criteria for measuring: are we high, are we low, right? So note this down. This is important. Let's look at the data ranges. So you said just now, based on only a pattern, you said market structure shift, right?
Correct.
Now, measure the data ranges. Apply all 3 of these. Get out of here. Apply all 3 of these data ranges. Count back 20 days. 1, 2, 3. That's 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, right? 16, 17, 18, 19, 20. 1 second. 26. 20 is over here, right over here. 20-day low. Now, what happens at a 20-day low, my friends? What is the classic pattern that happens, which is expected to be happening at 20-day lows?
Total soup.
Exactly, as seen in Street Smarts, right?
Yeah.
So, first of all, we are now below, measuring the if-to-day ranges, 20, 40, 60, right? We are now in the, according to the 20 if-to-day range, we're now below the 20-day low. That alone is enough for me to be bullish or not bearish. You notice? So it's not being bullish only. If you're not sure, you can simply not be bearish. Right? So buy low, sell high. Don't buy high, don't sell low. Right? So by measuring this, you're simply not being bearish. So if it doesn't make you money, it saves you money. Right? This measuring high and low, quantifying high and low. And if you remember, right over here, I had mentioned a tweet. If you remember, those of you who followed, some of you made some money with that, so good for you. But right there, I had called the low of the week on ES, right over here, and we'll see right now in the market profiles as well. Okay? Why did this happen up here? Why did price not keep going lower? It's a shift, right?
Hedge fund managers are like people are taught to sell when the 20-day low is broken on a breakout.
Let's check something else. Let's check number 2, the dealing range, the fib, the range which you pull the fib from, right? So I'm going to take a Fibonacci 2. Go to the swing low that broke the high, right? Right here, swing low, which is a low, higher high, two higher candles above it. The way ICT teaches it, nothing new over there. You measure the fib, and what does the fib say? Are we high or are we low?
We are low.
Very good. What does the current expansion leg say? Visually, right? Visually. Of course, you quantify this visual expansion leg with the data range. But the current expansion leg, which is the swing high we're coming from, because every price leg starts with a swing high or swing low, correct? Every single price leg has a swing high and a swing low to kickstart the price leg, right? Over here, this swing high over here, right? 1, 2, 3, swing high. Are we low or are we high? Visually.
Low.
Low. So are you bullish or bearish?
Bullish, because it's below the
Instead of using your market structure shift, now remove this and remove this, right? So we're below a 20-day low, right? So the data ranges are saying that we are low, and the dealing range is saying we're low, and the expansion leg, the 3 criteria to measure high and low are saying we're low. So are you bullish or bearish?
Should be bullish.
It should be. And was it? Yes, it was. And this is where the low of the week was called, right over here, almost to the tick, right? As opposed to simply, now look at the difference between that scientific approach, right? As opposed to simply shift in market structure, right? You simply go, shift in structure, sell. That's pattern trading, right? That doesn't work. Maybe sometimes to sucker you in, but it doesn't work. So measuring these three reference points, right? To measure, are we high? Are we low? Right? We'll see 2 more examples, maybe a bit more, with this same exact.
Sorry, just before you go further, can you tell us from where did you calculate the IPTA data range?
From the current day.
Current day, but your tool only showed 14 bars, right?
Yes. I think it's just regarding the weekends. Second. Data range right here. 20-day. Don't look at the bars. Look at the days.
Okay.
Right.
Okay. Yeah.
Because turtle soup. What is turtle soup? The 20-day higher low, right? Because turtle traders, which is a strategy as well, which it works. It's just it's simply low accuracy and high risk to reward. They're basically gambling, right? Pretty much. So turtle soup is suckering those people in large money. Money can be large amounts of money, right? Being suckered in at the 20-day high and 20-day low.
Okay.
And was it being at the weekly fair value gap low?
Thank you for bringing that up, because combine these 3, like you can use these 3 alone to trade one time frame, right? But now look at the same exact price leg, which you all said. Every single one of you said it's a shift in structure, right? Now look at the same exact leg on the weekly. What do you say now? Are you bullish or bearish?
Bullish.
Bullish.
Is there any chance you can be bearish over here?
No.
No.
There you go. Beautiful. Excellent. Right over here. So at this point in time, now we don't need to look back that far. We simply look back for short-term trades. We look back to the previous 20, 40, 60, right? So in the weekly, I think there's going to be 8 candles. 1, 2, 3, 4, 5, 6, 7, 8, right? That's 60 days, correct? So you know everything else behind this. It's noise to you, especially for short-term trades. In fact, the 20-day range will give you the 20-day data range will give you a good setup. It's enough. That in itself is a model by itself, right? So most of the things I'm saying over here can be a model by themselves. It's simply about choosing one and making yours. So are you bullish or bearish here? It is now. It was let me just double check. The month of May, I'm completely not dialed in the markets. But I was over here. It was April. So it is Wednesday, right? So time, what is time? Time of day, day of week, right? Day of month, week of month, and so on. Time of day within time of day for scalpers, and so on. So we're hitting a weekly FVG on a Wednesday. What's going to happen? We're hitting the weekly FVG on a Wednesday while we're low, while we're beneath the 20-day low. What can happen?
Low of the week.
Thursday and Friday is going to be reversal.
Yes. No, but focus on the concept. I'm not here to parrot and repeat the already available ICT weekly profiles, right? The point is the same exact fractal and price on the 1 day. What does it look like? A shift, right? Correct?
Yes.
With an FVG. And this same exact price fractal, when you're looking at the higher time frame, you're seeing bullish. You're all bullish now, right? So if you're bullish now, then why did you say bearish when I first asked you? That's the question. Because you were focusing on one time frame only, which is incorrect. You can do it if you want to look at the charts with one eye, but when you look at only one time frame, you're blinding yourself, right? And the rule, of course, which I made up myself, which I haven't really seen anyone say, so I'm gonna I'm simply going to attribute it to myself, which is a lower time frame market structure shift is less relevant than a higher time frame PD array. Go back to that one. Enjoy. So a lower time frame market structure shift is less relevant than a higher time frame PD array. Right? Let's write that one down. Lower time frame market structure shift is less relevant these fucking Spanish keyboards, less relevant than a higher time frame PD array. Now, this statement in itself is forcing you to look at two time frames. I know a lot of you are lazy, which is normal, or too lazy to consider the higher time frame. Like, you know, just fuck it, let me just trade this shift. But no, you're blind. A lower time frame shift is irrelevant in front of a higher time frame PD array. All right. So every time you see a shift in market structure, how do you apply this? Talk is cool. I can talk all day long. I can talk for hours. I've been talking for 5 hours almost right now, right? 3 hours, of course, as a bonus live stream for the early joiners, which I believe was recorded as well. So you look at that. But the point being that if you see any market structure shift, then you go and inspect the higher time frame, right? So, any questions about this?
For short-term trades, do you look at the monthly? Sorry.
What are you saying?
For short-term trades, you also look at the monthly, right?
For short-term trades, the 20-day range is enough. The 3-day and the 20-day range is enough to give you a nice short-term trade.
So then you wouldn't look at the monthly PD array?
I always look at the monthly every single time. Look at that. There you go. The reason I tweeted this, I'm sure some of you must have attended this tweet live, right? The reason I tweeted this was the logic I gave you right now is, number one, measure, are we high or low, right? We're literally below a low. And the rule number one says never buy high, never sell low, and buy low and sell high, right? So right over here, the logic was simply that, right? 20-day low into weekly FVG, and the 3 measurement points we have are telling us that we are bullish, not bearish, all right? And based on that, a simple tweet. It looks simple, it looks easy, but there's not a lot of thought. It becomes second nature almost eventually. But this is the thought process that went behind this tweet, right? Always same exact thing. So
but then would you expect it to dig deeper into the fair value gap a second time like we saw?
Again, this goes back to if you remember, I have a tweet that says there's 3 types of reactions to a key level, right? So when you have a key level, let's use the FPG for example, when you have a key level, right? The reactions from this key level can be 3 things. Whether it's a PD array, whether it's a support level, whatever it is. When you have a key level, the reaction can be one of 3 things. A V-shaped instant reaction, right? Or it's going to be a W/M shape, right? It's going to be a 2-touch, whether it's a turtle soup or failure swing, right? or turtle soup, even. You see turtle soup right there. Or it can be it can be multiple reactions to the same. Let me remove this shit. Remove. Or it can be the same. It can be multiple touches to the same level. Now, this one, of course, is the least favorable, right? This one is the least favorable of the three. You don't want to see this. You want to see either an instant reaction, or you want to see the most common one, which is this. So the most common reaction we get is this. So it's not unhealthy to anticipate a second touch of a key level. Now, I wasn't anticipating this one to happen, right? However, the fact that we took out the previous week's high on Monday, right, and gave this order block, that is a reason to target at least this low. So I called for a low of the week over here. It gave us a bounce, right? So that's regarding being wrong and making money, right? So you can be wrong and you can still make some money. And it tanked, right? So when you see a rally early in the week, then it's always suspect. Nothing new. Power of three. Right? So that is the logic behind the turtle soup setup. You see this? This is a turtle soup. What happened down here? You tell me. Dumb money got wrecked because we're talking about smart versus dumb money. Every single retail book classifies this as a sell, right? At least this or a retrace, one of the two. So every single, put it this way, the majority of people were shorting here at this previous support or down here, right? Except those who know, which is buy low, right? Sell high, or don't buy high and don't sell low. Right? If that rule doesn't make you money, it'll save you money. How do you measure high and low? You measure high and low using 1, 2, and 3. As we saw, 1, 2, and 3. Right? So that is example exhibition number 1, right? That is example number 1. Now, the same exact thing, because price is price and price is fractal. Remove. You guys want a break, by the way, or you guys good?
Good, man.
Yeah,
Good.
I got
Good.
a question on. I got a question on Khan Barakat. He was
What did he say?
asking. I'm speaking in behalf of Khan Barakat. He was asking, can you explain why you used that for dealing range about 5 minutes ago when you talking about dealing range?
Okay. You mean the range I measured the fib from, right?
I think so. Yeah, it was about 5-6 minutes ago.
All right. And you mean, why did I choose this low? That's his question?
Probably.
All right. I mentioned it at the beginning of the fib pull, so you should be focusing, my friend, not you, the other guy, right? So it's the swing low. Just again, it's. I feel like this kind of stuff, especially the Fibonacci pulls, they come from your own experience and tape reading, right? So the swing low, that the most energetic swing low that broke the high, that broke the low, right? So that is my fib pull, personally, right? You can even choose this one if you so choose. You can go a bit lower to this one, but the one I would use is this one right here. The same way good old ICT teaches it. So Do you guys want to break right now, or do you want to continue? You tell
Happy
me.
to continue, mate.
2-minute break.
Yeah.
See, you guys are watching. Huh? I'm the one speaking. So, all right. You can have a break. You have two choices: a break and then or example 2 and then break.
An example 2 and then break.
I had a quick question, if you don't mind.
Tell me.
Yeah, so regarding the IPDA data ranges, I don't have much idea about them. So the 20, 40, and 60, you used
if you don't have an
20
idea
days.
about them, if you don't have an idea about them, then go watch month 5 core content. Right? I'm not gonna go and teach you.
All right, I'll do that. All right.
All right. I'll teach how not his stuff. Keep that in mind before asking a question.
One quick question.
Tell me.
So then, could you have traded non-farm hero using this logic?
Do you mean
Since
the rally?
Thursday.
You mean the rally
Yeah.
we had? If you were following my Twitter, then I called the low, right, of the order block, of course, because I wasn't at the charts at the exact low. But as soon as they gave me the order block, then I called for a rally, right? Same logic. Nothing else. Previous week's low on a Thursday, right? When a higher time frame PDA, a key level is matching with Thursday, then and they give you a reaction, right? If you want some confirmation, you are entitled to it. Then price simply has no option but to reverse, right? Digging into the weekly key level for the second time. Remember the concept of touching a key level more than once. Now here's an execution tip, right? Is when you the reason people have break even. So I'm sure it's happened to you where you have a trade you enter, right? You put the stop at break even, it comes stops you at a break even, and then it rallies, right? That's happened for sure. To all of you, to every single one of you, I can guarantee it. The way you can prevent this is by healthily anticipating a second touch of a key level, right? That's how you implement that concept into your trading. You have the bare bones concept, make it yours. Feel free to go and try it out, and it's yours, right? So, there's 5 hours of speaking, but I can go for days. So, example number 2 now. How's that sound? Good? Example number 2. Sounds good?
Sounds good, mate.
Excellent.
So
we've been going. When do we start, by the way? 10.
About that, mate. Yeah.
10, 11, 12, 10. Dang. All right, almost done. So now, again, what do you see over here? Answers are welcome.
Market structure shift. A few market structure shifts bearishly.
All right, so you're expecting to sell down here, a FOMO sell, right? Or you sell
I see an old 60-day low taken.
In hindsight, it's 20 out of 20. But I'm saying, what would you see at the time?
Probably we're on the midway of the sell side of the curve of a market maker sell model.
Who are you? Let me see. Who is this?
Hopium.
Who's speaking? Hopium.
Hopium.
Right?
Yeah.
All right, Hopium. That's a nice name. You into crypto or what?
I used to follow crypto, and then I like the concept of it.
I can tell. So, what happened here, Hopium?
So what I said was I would have seen this as like the sell side of the curve has already started because we had an SMT at the top at the end of February, and then we're probably on the sell side, so we're continuing down to take the original consolidation at the bottom.
All right, so a nice pattern.
And we had
trader.
we had displacement below the low, so it's even more confirmation that we're going lower.
So be honest with yourselves, right? Now focus a bit over here. This is an important one. Be honest with yourselves, and what would you do over here at this point in time?
I probably try to short at the breaker, which is kind of at the high of that SIBI, on the daily SIBI. I'd wait for a retracement to short, basically. Yeah.
All right, very good. And any other answers? More
No,
answers?
if I'm being honest, sorry.
If you're being honest?
If I'm being honest, yeah, I would be bearish as hell and want to look for shorts.
Exactly. Bearish as hell, right? Equal lows,
Yep,
man. Look
correct.
at this.
Yep.
Low. God damn. So, and what else? More answers? Any different answer? Because I know that most of you were bearish on Twitter. I saw all of you, right? Not you, but people in general. Every single person was bearish down here. Right? Now, luckily, I have the remedy to that, to the sickness, which is the market structure shift, right? What's rule number 1?
Rule number 1: buy low, sell high.
All right. Before we start, I want to invite somebody to talk who is DMing me. I hope I can find you. I can't. My friend Pip Smoke. All right, there's a few notable people over here who are astute learners and deserve to be praised. There he is. Allowed to speak. There are some others as well, but I can't see them right now. I cannot see them. So,
what's up?
What's up, buddy? How's it going?
You doing all right, you?
I'm doing good. I'm doing excellent. Here's someone else who wants to speak. Allowed to speak. Oh, this shit. So, being honest, I'm assuming you're all real traders, right? Who trade live accounts, who risk money day in, day out. Most of you, at least. So, what would your actions be down here?
You can hear me.
Hopium said selling. The other guy said selling. Bear says hell and selling. What else?
If I'm being honest, I wouldn't be bearish. I would start off with the weekly time frame and see what the bigger picture is.
I mean, it's a recommendation to be honest with the answer. Why? Because if you don't, you won't learn, right? If you don't be honest
I'm honest. I wouldn't.
What are you saying?
I wouldn't be bearish. Just for the fact that I choose.
I trust you. That you're honest. You're the only one I can trust over here. Well, almost, and a few others, right? About the answer. Because I've seen the stuff you send me on the DMs. But as a pattern trader, 99% of Twitter was bearish over here, right? How did I calculate the stat? I don't know. I just made it up, right? But everyone on Twitter was bearish down here. Why? Because of a market structure shift. The same exact logic that we saw in ES, right? Flawed logic, if I may. Now, rule number 1 is buy low, sell high, and don't buy high and don't sell low. Correct? Based on that, how do we measure high and low, my friends? How do we measure high and low? How do we measure high and low?
20, 40, 50.
Again, looking for the IPDA data range.
Yep. Number one is the IPDA data ranges. Number two is the dealing range, correct? Number three is the current expansion leg, right? A visual representation of the expansion we have experienced from the swing high or the swing low. All right. So measure them instead of now think about what I'm doing right now. You're changing your mind completely based on the information you have. So you were selling down here. Now, based on this measurement, which is rule number one, always, right? IPDA, what does IPDA say? IPDA. Let's go to the data range. So you go one, count from 20-day, low or high. Low, right? Nice silence. 40-day, low or high? Low. 20, 40. 60-day. Let's go to 60-day. So, as I said, for a short-term trade, the 20-day data range has enough liquidity within that range for a good trade, right? Short term. The deeper you go, the longer the range. The deeper backwards, deeper meaning the more back you go, the more forward you can cast. So we look back to cast forward. Data ranges, 20, 40, and 60. Right? And the 60. Let's measure all of them. 20 low, 40 low, 60. Is it high or low? What do you say?
It's in a discount of the 60 range.
Very good. Very good. Excellent. So we're low by all standards. Yes or no?
Correct. Yes.
Yeah. And why? And what does rule number one say? Buy low, sell high, or don't. If you're not sure, don't buy, because when you're going to apply this yourself, then you may be confused at the beginning, right? When you apply this, you'll be confused. So that's why there's a second part of the rule, which is don't buy high and don't sell low. Never buy above a high and never sell below a low, right?
Excuse me, Romeo. I'm not sure if you expanded on what number 3 actually means compared to number 2.
The expansion leg. All right, we'll see right now. We'll see right now. So IPDA is saying we're low, right? The data range. And what we're doing is we're measuring high and low right now. The dealing range is saying we are low. The low that broke the high, right? This one, we're actually at an OTE, right? Now, so we have 2 checks, which are enough. But the current expansion leg, meaning visually the swing high, right? Any swing high. Are we expanding to the downs? Are we visually down or up? From the most basic retail sense, are we down or up? That's what it means, right? Are we high or low right now? You tell me. From a raw, bare bones perspective, are we high or low?
Low.
Pretty low.
Exactly. Like, we're running downwards below 2 lows, right? Below these 2 lows. So all 3 are measuring and telling us that we are low. And the market structure shift is telling us we're bearish. So which one do we trust? Of course, we trust the truth, which is rule number 1, right? And your mic, if you don't mind, shut it. Thank you. Now we combine these factors together with the fact that we have let me remove this. We have a swing low right over here, which was my target. right over here. And now we've come to the part as to why it was my target. This is the juicy stuff.
Excuse me, it's Mr. Ali. Your mic is on.
See.
It's liquidity below equilibrium of the dealing range.
It is liquidity below. It's basically a. But why not this one? Why did I choose this one, and not this one? That's the question.
That one is above equilibrium. They both are inducements, in my opinion.
All right. They both. So could it have reversed from here? Could it have reversed from this one?
Highly unlikely, because
why?
With trading in a range, you could trade up to equilibrium, to the middle of the range.
I mean, right now you have, if you measure, it could have come and hit the 50%, right? It could have hit this rejection block or order block and rallied, right? So a turtle soup in 2 PD array. Why not?
Yeah, but probably rallied just for an OTE entry to go further deeper in the higher time frame.
What's the reason? There's one reason, a valid reason. Because see, by your logic, discount, right? It's premium. So right now, we have this low over here, and we have this order block and rejection block, right? So why can it not do this? Stops here, 50%, right? Discount, then it rallies. Why? What stops it from doing this? Fuck's sake. Why? Why this low?
As it's the first low in a discount.
No. Because of the weekly FVG. Right? So take a look at this fractal, which you all said is bearish, correct? Except Pip Smoke. I mean, logically, it's bearish. If you follow ICT like a parrot, right? High, low, higher high, lower low, shift, breaker, sell side, correct? That's the pattern trading, which is incorrect. You can't do that. Let's look at the same exact fractal on the weekly chart. Now what do you see? Are you bullish or bearish? And do you now see why I called 20,400 as opposed to only that? Now, bullish or bearish over here, down here?
Bullish.
No, clearly bullish, but
is there any
bullish?
Is there a chance that you can be convinced bearish? APR.
No, if the bullish PD arrays are being respected, then no, there's no logic to be bearish here.
Liquidity, right? Liquidity purge. Not a stop hunt, a purge. Right? So we have this. And we have a market structure shift. You remember what I said about the shift? It doesn't happen the way you want it to. At the beginning of the session, I had a specific drawing with a specific logic, remember? Which is when one of you, I think it was Z1 Trader, he said, show it to us on a chart. Right? He didn't like the drawing I was making. So I showed it to you on the chart, right? And here's another example, which is low. Everyone screams, look at the narrative and the logic and the context. Low, below a key level, 16,200. Bottoms in, right? It rallies. Bottoms in for sure, right? It purges them, flips them bearish. All right? and then it breaks the high that caused the purge. The candle, the bullish candle that caused the purge, breaker, right? And it didn't go the way you expect it to, which is simply going like this. This is retail logic. It makes no difference than any other retail trader, right? What happens is a much more psychological process.